Hey there, Mike with Financeable here. Today we're talking about LTM, or last 12 months calculations. And in this video, we're going to kick things off by explaining why people use LTM calculations in the first place. We'll then explain to you how to make an LTM calculation, and we'll wrap things up with a few real life examples. So that's the plan for the video. Let's hop in here. All right, to begin with, LTM stands for last 12 months. And the idea behind an LTM calculation is that we want to see the most recent 12 months of performance when we're analyzing a business. Now, if we're looking at the annual numbers of a company when they've released their annual report, this is relatively easy. They give you 12 months performance and you're good to go. The problem is, as we move into the year and start getting quarterly reports, companies generally don't provide the previous 12 months of performance. Rather, they provide year-to-date performance. And so we have to make some adjustments to get to the LTM numbers. To illustrate this a little bit further, in the first quarter of each year, we're going to have a 10K with an annual set of numbers, and then a 10Q that gives us the first 3 months of the current year and the 3 months of that same period for the prior year. But what we really need here is March to March. In the second quarter, we get, again, a year to date from the quarterlies, but what we need is June to June. And then in Q3, it's the same deal. We get 9 months of year to date data, but what we need here is September to September. And perhaps you're seeing the pattern here and where we're headed with this. On the next slide, we'll talk about how to calculate LTM. So to calculate LTM, we start by pulling the latest annual data. We then add in the latest year to date and then subtract out the prior year's year to date for that same period. And that gives us LTM. Now, to show in more detail what's happening here on an underlying basis, let's imagine we're sitting in the third quarter of 2020 and we need an LTM calculation. We need the last quarter of 2019 and the first 3 quarters of 2020. Let's start with the 10K. The 10K gives us all of the quarters for 2019. We don't need all the quarters, we just need that last quarter, but at least to start with, we have that last quarter of data, so we're good there. We need to add in the first 3 quarters of 2020, which is the next step. The 10Q is going to give us 3 quarters of data here, and what we need to do is add that to the numbers, which gives us our LTM, but the problem is from the 10K, we still have the first 3 quarters from 2019. So what we do is we back out the 3 quarters from the prior year to date from the 10Q, and that gives us our LTM. So short story here is take the annual, add in the latest year to date, subtract out the prior year to date for any given period, and that's going to give you the LTM number. So we've covered how to calculate LTM. Now let's talk about how we would use it in real life. And the short story here is we would use LTM calculations for any metric that transpires over a period of time. So really your income statement and cash flow metrics, not your balance sheet metrics so much that are end of period metrics. It's just the things that transpire over a period of time. So to give some examples, we could calculate LTM revenue to see how the company's revenue has performed over the last 12 months. We could calculate LTM EBITDA, or we could calculate LTM cash flow. And these are probably 3 of the most common LTM metrics you're going to find. One other thing to clarify is LTM versus TTM. So sometimes you'll hear the term LTM, but other times you'll hear the term TTM, or trailing 12 months. And the short story is they mean the same thing. So these are equivalent terms. So if you hear LTM, it's the same thing as TTM. Now let's look at a real life LTM calculation. So we're going to calculate the LTM EBITDA for Sealed Air, which is a packaging company. Here we have the data from Sealed Air's 10K filing. So we have their EBITDA for 2020, which is the first piece of calculating LTM. And here we have the quarterly data from their first quarter 10Q in 2021. And what we want to calculate here is the LTM as of March 30th, 2021. So we have the information we need. Now let's hop to the next slide and pull all the information together to calculate the LTM EBITDA. So let's start with the annual data. We have the annual EBITDA from the 10K filing, and we have the latest year-to-date data from the 10Q filing, which will add to that annual data. And then we have the year-to-date data for the same year-to-date period in the prior year from the 10Q, which we're going to subtract. So when we take the annual, add the latest year-to-date, subtract the prior year-to-date, we get to the LTM EBITDA for the company. Now that we've covered a sample LTM calculation, we're going to talk about some real-life use cases where LTM commonly comes up on the job. So in valuation, in investment banking and private equity, LTM EBITDA is often a central metric. And the way this works is we use LTM EBITDA to calculate the sale price or sale value of a company by taking EBITDA and multiplying it by a peer EV to LTM EBITDA multiple. So LTM EBITDA is also central to the world of credit. When lenders provide money to borrowers, they typically look at LTM EBITDA and lend based on a multiple of that LTM EBITDA. So hopefully this concept makes a little bit more sense now. If you found this video helpful, definitely hit the like button down below and subscribe. We've got a lot more videos coming. Take care and hope to see you soon.